Microsoft out with a statement today that the report inaccurately combined the concepts of growth and sales quotas and that aggregate AI sales targets have not been lowered. For more, let's bring in Jefferies analyst Brent Thill. He's got a buy rating, a $675 price target on Microsoft. Brent, great to have you with us. What do you make of the report?
I think it's a data point, and everything we're seeing in our Microsoft work, and I'm at the Amazon conference in Vegas, is suggesting that AI demand's accelerating. You saw it in Snowflake's numbers. You saw it in Salesforce numbers. You're seeing it in thousands of people here in Vegas walking around talking to end users that the era of AI is continuing to pick up, and agents are going to go live, and those agents are going to create more workloads for Microsoft, and that's going to influence the adoption of the entire portfolio. We do not see a slowdown. They just put up 50+% RPO backlog. They've said that they cannot keep up with demand, that they don't have enough supply. And so I think it's a data point. I think if you wanted to take the information article and say a lower AI target, the way you would look at this is that Amazon said this today at their conference, that AI agents are like teenagers. We call them infants in a crib that are still have diapers on and a bottle, and they're throwing toys out of the crib. These AI apps are really young. And I think that the software industry needs to go generally to a lower pricing model to get agents live. And once they're live, then that influences the adoption of more agents. So I think there's a silver lining in the report, which is that many of the companies came out of the gate. Salesforce pricing was too high. Atlassian, the whole industry priced AI too high. And so I think that from our work away from this Microsoft event is that pricing needs to come in a little bit to get adoption higher. Remember, all these AI products for the enterprise are less than a year old. And the running joke at Microsoft for years has been, the first product is rough, second one gets a little bit better, and the third one is where they nail it. And that can be a 1 to 2 years cycle. And so, again, if you take this, if I'm just playing the independent research analyst, it's going to take time for these to build, and we're very bullish on the 26 rollout of these AI agents. And so,
Brent, sorry, Brent. If your point is about lowering pricing to get greater adoption, right, that's going to suffer, or at least margins are going to suffer a little bit. And just, I know you've been covering the space for a long time. What do you think the pricing power of these companies will have to kind of, gain more margin of it with increased adoption? Because there is an argument to be made that a lot of these agents or the technology that powers them is going to be commoditized to some degree by the time we get mass adoption.
I think that, again, I'm not suggesting Microsoft is doing this. I'm just suggesting what we're finding in our work. But what I'd say is I think that you can't walk in any new product and effectively just charge a premium. And so I think what we're hearing is these agents are all about to go live. There are a lot of agent builders. There's dozens on the showroom floor over at the Venetian at the AWS conference. And I just say I think there's going to be a battle for who builds these agents. Everyone has an agent builder. And to your point, there will be commoditization. We are not there yet. These are, we're way too early, and everyone is quoting there are going to be billions of agents that are out running. Instead of having 10 workers, we probably have 7 workers and a bunch of agents doing work for us. So I don't think we're at a worry of being commoditized yet. Yes, that will happen, but I think the big platform companies, it doesn't matter for Amazon, Google, and Microsoft because they have the infrastructure. The agents have to have a home, and they have to be fed and watered, and those platforms will work. There'll be agent builders themselves that get commoditized and don't make it. And this is reminiscent of the internet and cloud and SaaS boom that we've watched over the last 30 years. So it'll happen, but I don't think we're anywhere near that level yet in terms of commoditization.
It's very clear. By the way, Brent, and real quick, do we have to recalibrate our brains in terms of what valuations are in today's world? I mean, is 32 times this generation sort of low 20s for Microsoft?
Well, software's been for sale, and as you know, semis are ripping. Semis are where all the excitement is. And so I'd say that many of the software companies are undervalued from our perspective. If AI really takes off, and our theme of 26, 27 is the year of enterprise AI, then that's when revenue influx, and we're going to see an acceleration. We're already seeing an acceleration in Amazon and Amazon's business, Google's business, the Azure backend for Microsoft is accelerating. So I think that we can argue that multiples are pretty stable here, and in our opinion, should go higher. I mean, you look at Salesforce multiple. I mean, it's like the application stack. All these apps names are down 30% year to date. Semis are up 60. You know, it's like, I mean, I feel like I'm a garbage man right now with covering my space because everyone hates software. So I think multiples actually have room to go higher across many of our companies we cover.